December 3rd, 1986. The market is about to close. Paul is on the phone from Chicago, and Peter is at the helm.
Yesterday, there was so much buying after the close that the tape was 9 minutes late, and that was a 130 million share day. I believe that today will be record volume, which matches perfectly with the analog to 1928 when there was record volume on the decline, and it did not take it out until the week, which corresponds to this week on the analog, right? Yeah, when the market exploded.
This morning we were trading over 1 million shares a minute.
Yeah. And then what happened? They were caught short?
They got out, and on the futures exchange where I trade, they got out 30, 40 points away from their positions. We were sitting there at new highs, and everybody was just looking and see what was going on with the S&Ps. And we just sit there, and everyone was just nervous. There were no bids and no offers. I mean, literally for 20, 30 seconds, we'd all just sit there and look at each other because it was just an anxious time. And it was just constantly moving.
December 5th. 2 days later, and the energy is still building.
Tell him I want about 300 in the first 2 minutes, no matter what the price is.
70, 50, but at least 200.
Tell him to finish it up.
Prices are starting to rise, and Paul is not finished buying.
Buy 300 at 90 or better right now.
Excuse me, repeat that.
90 for 300.
One for 300?
Buy 300 at 90. Buy 390.
390, okay.
In time, do not fuck around. I want to buy them.
Okay.
Quote me, quote me, quote me. What's the market?
85.90, 85.90.
90 for 3,000. 90 for 3,000. Fill or kill. Well, I think we have a position.
20, 30, 95 even, at 90.
Jesus Christ.
12:20 p.m. The market has suddenly turned sharply down. All afternoon, the market has been dropping, then pausing. Every pause brings hope for an upturn, but then it drops again.
We're out, Paul. We're out. Just tell me to do a total of 350, that's it. That's just total devastation. You know, the agony and the ecstasy. This is what's known as the agony.
4:10 p.m. The stock market is closed.
We were on the wrong side of the market. What can you say? It's total devastation.
Well, I think we lost about 5% today, which is one of the bigger hits we've ever taken, which is drag.
Five percent of Tudor Investments equals about $6 million. February 17th, 1987. The stock market closes in 14 minutes. Based on the 1920 stock chart, Paul has bet against the herd that the Dow will take off today, and so far it has. Right now, Paul could cash in and make several $1 million.
I want to sell it so bad I can't stand it. I've just been sitting here wanting to sell it all day, but I know the thing for me to do is just not to, another thing for me to do is just to sit back. In fact, I shouldn't even be talking to you or looking at the screen. I should try to go work out right now.
Yeah, I think that's what everybody...
Meaning that I'm so long, I am scared to death. And the Dow Jones right now is at an all-time high of 2233, up 49 bucks.
2 months have passed since we saw Paul's fund take that $6 million loss.
Right. Well, now you saw us get it back and then some.
If the market is a reflection of people's behavior, and people behave similarly in similar circumstances, then history of market prices may give us an indication of what may happen in the near future. It's really pretty scary. You know, if it looks like a duck and it acts like a duck and it sounds like a duck, it's probably not a chicken. And that's what's scaring me about the activity in the stock market right now. Riding it out till the market goes to about 31, 3,200. Don't wait for top tick. That's 1988. Severe drop, a little rebound. By 1991, the market is going to be under 500 on the Dow.
Yes, there will be some type of a decline, without a question, in the next 10 to 20 months, and it will be earth-shaking, it will be saber-rattling, and it'll have Wall Street in a tizzy, and it will create headlines that will be that will dwarf anything that's happened at this point in time.
Everybody, we welcome you to our Monday edition of Market Wrap, and historic day, obviously, as we've been telling you all day today. If you have been away from your television set and haven't heard about the stock market, this was it. We have exceeded the percentage drops that we saw in 1929. Point-wise, this, of course, is a record as well. Volume-wise, records across the board, as we saw the tremendous selling that we experienced last week. And you can see that near the close there, we had a gap down on the close, tremendous amount of selling on the Dow Jones Industrial Averages. We finished down about 450 points. I don't have an exact reading in front of me right now, but as you'll be able to follow on the lower ticker there, it is a record drop. All right.
I think that we've got a market that has been seriously overvalued for some time. I think that what we've witnessed the past couple of days has obviously been the piercing of this bubble. And I think that what you saw today and what you may see tomorrow morning will be the culmination of this selling climax for now, and I emphasize for now.
Now, you had told me a few weeks ago that you were looking for a drop. Did you expect it to be this precipitous, this quick?
No. We thought the market would be under pressure through October. We thought it'd go to the low 2200s, but we thought you'd see this kind of a break sometime early next year, but quite apparently, the market's doing exactly what it always does, and that's fooling 99.9% of the people, and that's why it's happening now. I would say Wall Street uniformly was unprepared for this magnitude of a drop, and of course that's why you got it, because that is the nature of a market.
Yeah. Now, you know, people had been looking for a drop when the bear market set in, perhaps after we had hit 3,600 on the Dow. Is this the kind of a drop where we're going to wash that out, have a bear market that could last a few weeks and then it's over with and we resume the uptrend? What are you thinking?
I think that you are in the beginning of a primary bear market that's going to last for, unfortunately, a long time to come. The action today, if you were a stock trader, and particularly if you were a stock trader trading simply on a technical basis, you would have made two trades in the 80s. You would have bought the market in August of 82 when you had record up volume and you had a record up day on a nominal basis, and you would have sold the market beginning on Friday when you had range expansion, a record nominal down day, and also record volume. Today is simply a confirmation of what began on Friday, and the only thing that I can take heart in is I think that you did unquestionably today finish this wave of the selling climax. I think you've got two things to look forward to in the next 24 hours. One good and one not so good. The one bad thing is that this afternoon, Proctor on his hotline will unequivocally come out, not unequivocally, but I would say the odds are over 95% that he'll come out and say that the bull market is over and then we're now beginning a major league bear market. But I think a lot of people, particularly professionals, recognize that fact, and that was certainly discounted to a great extent today. The second thing that we have to look forward to in the next 24 hours, and certainly we better see this, is we should see massive federal and governmental and administrative intervention in foreign exchange markets. We should see them in the debt markets. We should certainly see some type of constructive action to stem what has unquestionably been a panic.
What are you as a professional trader doing with this market, Paul? Are you just out of this, or are you trying to trade this at all? I mean, I know you're the maniacal trader anyway, huh? Sitting in front of the Quotron machine all day. Are you trying to play this down move at all?
We've traded it heavily for the past 2 weeks, and that's the only comment that I'll make.
Now, as far as the rest of the futures markets, is there any kind of a play there? I mean, gold went higher today. Oil kind of went higher at one point, but are you looking at those as trades right now?
I think that what you've got going on, for instance, if you notice today, you had the CRB index down, yet gold and silver were through the roof. You know, one of my favorite trades right now is unfortunately being long fear, which means being long the metals complex and short the rest of the hard commodity complex. Because I think what you're going to see over the course of the next weeks is you're going to see, and of course what you saw today was the fear of a liquidity crunch and the fear of disinflation and not deflation, disinflation and deflation.
Yes.
Gold and silver were not up today because of inflationary fears by any stretch of the imagination. They were up because of the fear factor.
30 seconds. Are you afraid for the economy at this point? I'm not trying to, you know, make this reactionary at this time, but is that something that we might consider as well?
I think that everyone, every American at this stage of the game needs to get their house in order, needs to be prudent and be conservative in their investments, needs to cut back on whatever speculative investments they have. I think the next few years will be a period of capital preservation, and that's where the emphasis needs to be.
All right. Thank you, Paul Tudor Jones, very much.
I personally gone bankrupt, not declared bankruptcy, but lost everything I had and had to borrow from friends 3 times in 9 years that I've been in the business. Where I'd go sit in the park and just sit there and just go, I can't believe this. You know, this is the end. This is the end of my life.
Where you want to be is always in control, never wishing, always trading, and always, first and foremost, protecting your ass. And that's why most people lose money as individual investors or as traders, because of the fact they're not focusing on losing money. They need to focus on the money that they have at risk. How much capital is at risk in any single investment they have? If everyone spent 90% of their time on that, rather than 90% of their time on pie in the sky ideas about how much money they're going to make, then they'd be incredibly successful investors. Because, I mean, after a while, the size means nothing. You know, it's just, again, it gets back to the question of whether you're making 100% rate of return on $10,000 or $100 million. It doesn't make any difference, right? You know, if you complete 78% of your passes, it'd be nice if you're in the NFL, but if you're in college or high school or even elementary school, I'm sure the thrill is just as great.
through the harshest teacher in the world. It's Mark. There's no curve. You know, I can't say that, boy, I was out late last night and everybody else in the class was at a pep rally for the football game.
I got a 65, but that was the best in the class. I get an A. Guess what? Does not happen in markets.
This is a story about capitalism. It's a system I love because of the successes and opportunities it's afforded me and millions of others.